Good morning, everybody, and welcome to Beat the Bell, presented by Kane Capital. I apologize for the technical difficulties there. We were caught just as off guard as you were. But good morning. It's Friday. Hopefully, you guys have all had a phenomenal trading week thus far. Let's get straight into the panel, starting with Money Mander, who's in full-blown moving mode. Money Mander, good morning.
You got it.
I'm glad to have you back.
It's good to be back. It's good to be back. Horrible 2 days we had. As you can see, no setup here, but getting it done anyway.
I love it. Ramsay Rippers on the same boat. Ramsay, glad to have you back.
Thank you, brother. Glad to be here on the move. Let's get going. Let's have a good show today.
And Diamond Trades. Good morning, Diamond.
What's up? In my natural habitat. No moving for me. Excited to get going.
Stationed and ready to go. Straight into Fed forecast. What do we got?
Yeah, let's start with the economic calendar. We really don't have much for today. We actually have no high impact news for today, but things are definitely going to heat up next week. So here's a bit of a preview for what we've got on the slate. We've got inflation expectations in the monthly budget statement on Monday, into CPI, and of course CPI on Tuesday, followed by PPI, the FOMC interest rate on Wednesday. We've got retail sales, weekly unemployment, and a couple of the manufacturing indices coming out on Thursday. And then Friday, we've got UMISH inflation expectations and consumer sentiment. So next week is definitely going to be a busy one as far as news, and I'm sure that it'll provide some volatility for the market as well. So stay tuned for that. And we'll touch more on that on Monday. The yesterday's trading, the market recovered yesterday following Wednesday's sell-off, with all three major indices closing in the green. So the NASDAQ added 1%. The S&P closed up a little bit over 0.5%, and the Dow 0.5% exactly. This close actually puts the S&P 500 out of bear market territory. So we're officially in the start of a new bull market, whether or not you believe that, this is a traditional sort of bull market, XYZ. I'm sure Mander will touch on that a little bit more. Technically, this is the sort of a new bull market right here, 20% off the lows. This was the longest bear market that we've had since the 1940s, somewhere around, I want to say 540 days. So one of the longest bear markets in U.S. stock market history. The market has continued to rally on dips and what feels like a perpetual short squeeze into levels that we really haven't traded into since last summer. So the S&P 500 just recently took out those August highs. High beta stocks have also started to participate in this rally. And a lot of those stocks that were down, 80, 70, 90%, some of Cathie Wood's favorite names, those stocks have also started to squeeze as of late. So we've had, a firm, these are all literally since Tuesday's open. So we've had a firm up 20%, UPST up 18%, Coin up 10%, and Tesla up 9.8%. We've seen a lot of the high beta names really running, lately in this market. And that sort of makes sense. As the bull market continues, we sort of, spread out into further out on the risk curve, right? And so you start with, some of your core staples, your Apples, your technology stocks, that are seen as relatively safe, the Microsofts of the world, the Googles of the world. And then that rally starts to push out into some of the more speculative names as people get pushed out further on the risk curve looking for that yield. And that's exactly what we're seeing as of late in these names. And we'll have to see if summer of 2023 is going to be reminiscent of summer of 2021, where a lot of these names really we're going vertical for weeks on end. That's exactly what we saw a couple of years ago. I know that's what a lot of traders are hoping for coming into this summer. So the market is roaring. The market's hot coming into the big news week next week. Mander, what do you got?
Yeah, I hope we get a squeeze like that. It'll be a lot of fun if we get that summer 21 kind of environment. But I think this goes right back to what we were saying last week, as we saw that ratio in the QQQ and the Russell 2000 hit that all-time high above 8. As we start to see profits getting taken out of mega tech, which has really underperformed this week, we're starting to see it go into those beaten up names that are 80, 90% off of highs. And what's that cause? A major short squeeze. I mean, Carvana didn't destroy earnings, but they had, all right earnings yesterday and squeezed 55%. Because as you start to get up, you have people short the bottom there and short the entire way down. You're just running the stops the whole way up. So you get these really aggressive short squeezes. And I saw someone on Twitter say yesterday that short squeezes are like cockroaches. And when there's one, expect to see multiple. So that's kind of what we're seeing as this breadth pans out. But on that light week of data, like you said, Not much to review. So I wanted to take a look ahead to next week and kind of discuss the data we have coming next week and the Fed. So I think the Fed is going to be the biggest thing next week, obviously. Also CPI and PPI that you hit on, but markets are currently pricing in a 3-to-1 likelihood of a pause next Wednesday, kind of trading like a penny stock. It feels like just, a week or two ago we were on here. It was 75% for another hike, and now right back to 75% for a pause. So to me, I want to get your 2 cents on this. To me, I think they're right back to overpricing in the likelihood of a pause, kind of just going off the data we saw the last month. So CPI came in unchanged yet again, sitting right at 5% year over year, off of higher comps, right from like 5.2 the month before. Core CPI unchanged from 5.5%. Month over month PPI actually flipped back positive after going red in March. Not what you want to see. Retail sales came back positive also month over month after falling 0.7% in March. Personal spending, double expectations. ADP employment, 78% above expectations. NFP, well above expectations. So you kind of had, the labor force and spending going well above what was expected and inflation remaining unchanged. All the while, Canada just came out and did exactly what I'm thinking Jerome Powell is going to do, and they hiked when markets were pricing in a pause to start. They actually had already paused, I believe, and then went back to a hike as data was not showing what they wanted it to. So to me, we said this before, just going off of diction, everything Jerome Powell has stated is that it's all going to be data driven. And a pause was possible, but it's all going to be data driven. And to me, the data is just not showing what they want to see. What are you thinking there?
I think I actually, believe it or not, I actually do think that a pause makes sense at the next meeting. And I think the thing that becomes tough for them is if a pause makes things like worse, if a pause sort of loosens financial conditions to a point significant enough where you see inflation start to creep back up. That's obviously what they don't want, and it seems like that's what happened in Canada, right? They paused, and that seems like that had probably a positive effect on financial conditions. They got a little bit less tight, and then if you're not really seeing inflation come down now, and then financial conditions get looser, I don't understand how that would lead to lower inflation in the future. So I don't know. I could honestly see a similar situation here where they pause and then in like August they're like, we're not seeing what we want to see. We're gonna actually go back to a raise, right? Like that would be essentially what Canada just did. And so I think that that's a possibility. The market really seems to be aggressively pricing in a pause and cuts by the end of the year. I don't know how we get there. Man, to be honest.
Right. The markets are definitely pricing in right now. I think the biggest worry for the Fed right now is that if they do pause prematurely, which they've said that's literally their mantra is they don't want to do that. And I think we're getting to that point where, they want to pause, I'm sure, but at what point, like if Canada happens, at what point do then we run the risk of entrenched inflation? If they then have to come back and start hiking another cycle because inflation starts ramping up, now you're looking at 2-3 years of elevated inflation, which is really the last thing they want. So we'll see. I think a 50-50 makes sense because just off the minutes released last month, it seemed like 50% were in favor of a pause then, 50% in favor of a hike. So we'll see how this month comes out. But data packed week we have coming up next week. I'm excited for it.
Do we know what they're paying on call sheet for the hike probability?
I assume it would be like 23 cents right now, going off the 23 cents to pay a dollar.
I'll find that out and I'll let you guys know if that's a bet that we're taking before the end of the show here. That'll wrap it up for us on Fed Forecast. Pass it back to Alejandro.
Awesome stuff, fellas. Let's talk about the S&P. We're going to take a look at some technicals, starting with the system. So we, of course, have the 30-minute and 1-hour SPX charts. We've got the 50 SMA and the 10 SMA, green line, blue line. The blue is the 50, okay? So very important. Why do we use both time frames, guys? Everybody should know this by now. We talk about it all the time. When both time frames are telling the same story, that's when the magic happens. We did get the technical sell signal on the system with the bearish cross of the 10 SMA below the 50 SMA, but you cannot rush into short. Why? Because the 50 SMA on the 1-hour chart was sitting just below. So it is very clear that that has been working as support and that momentum is in the bulls' favor as of now based on the system. So keeping an eye on this, watching for the 50 SMA on the 1-hour chart to continue to serve as support. As long as that remains the case, The Bulls are in control. And right now, the Bulls have also the favor of trading above the 50 SMA on the 30-minute chart and getting the technical buy signal yesterday of the bullish cross over of the bullish cross of the 10 SMA over the 50 SMA. Now I want to switch screens here and talk a little bit of ES futures. We'll discuss what we got going on there. Give me 1 second. Beautiful. ES chart. Thank you, Ryan. So coming up on a very important breakout point to start today's session. So the theme that we've seen, guys, we've been getting these rallies on Thursday, Friday, right? That's what we saw last week. We got this Thursday, Friday giant rally. To start the week, we've been getting pullbacks and chop. That's what we got to start this week. And now, yesterday, Thursday, we got a little bit of a pop. ES put in this false breakdown where we take out this 42.68 support, the recent low. We come down below, trap shorts. This has been setting off a lot of these rallies. It set off last week's rally. If I pull back down to the low here, if you guys remember, we broke below this support here, okay? Stop out longs, trap shorts, and squeeze. Stop out longs, trap shorts, and squeeze, okay? Now we're coming up on a breakout point once again at ES. We have this trend line coming down. Clear that 4,300 is resistance. I'm leaning that this breaks out, not because of the recent trend of the Thursday, Friday breakouts, although that does help, but because we are in a technical bull flag. So there's a couple things that are working in the Bulls' favor here. We have this trend line obviously coming down, but looking at what price has done since yesterday's move higher, we've been bull flagging overnight. As simple as it gets when talking about technical analysis. You have a resistance level, you have a support level, you have the support holding after a move higher, and just a flag and a coil. And so we're going to be watching today for this 4,300 to break out. I am long. I got long yesterday, so I'm just down to a runner now. But if we can break out, I would expect to move to 4,300, then 4,330 potentially today. Okay, guys, so that's what we're taking a look at technically on the S&P. Now we're going to go over to Ramsay Rippers for Bet the Bell.
For the system, I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. Good morning, guys. Let's get right into it. Ryan, pull them up for us. All righty.
Wait a minute now. If you do, what's the actual percentage? We need like an additional decimal point here, I think, to be completely honest.
You guys are tied, I believe.
Well, no, because 40 divided by 24. I mean, like what is the? I feel like I've got a lead.
No, I mean you're still. I mean, you haven't played as many games as I have, so you're still technically a half game back.
Yeah,
there we go. These are the new stats. This is what I'm saying. Right here.
How does that make any sense?
What do you mean? How does that make sense? It's by win percentage.
No. But that doesn't make any sense when I've played more games than you.
It doesn't matter, bro. It's a win percentage basis, and I have less.
It does matter. That's ridiculous.
I have less losses than you, and I have a higher win percentage. Therefore, I'm in first place. I mean, and to be completely honest, if I had not won on Wednesday when I said red and you thought it was absolutely insane, Ryan, if you want to play that clip actually of Alejandro, I will go red. I'll go red. Red close. Look at that face. Look at that face he made.
You guys actually have nothing better to do.
This is the type.
You
of
actually
stuff
have nothing better to
guys.
do.
This is the type of stuff.
Let's get to the questions. Get to Ramsay Rippers, please.
Love that.
All right, let's do it. Love the banter, the friendly banter. You guys know what's coming. Green or red today. Indices slightly up, like 1/3%. Diamond, what do you got? Champ.
I'm gonna go green. Today.
Hondo.
Same here. I'm going green.
Mr. Salomon.
Green. Friday call buying lives on.
So everyone's going green. All right. Let's pull up the tweet that I sent last night. Ryan Carvana. Stocks up 67% yesterday, up almost 500% on the year alone without mentioning AI. Pretty impressive. So what do you guys think? Is Carvana alive from the dead, or is this thing just is this still dead? Price target still 0. Mander.
Carvana back from the dead, right back to 390. No, I think this was just a short squeeze, right? Everyone was super short this name really the entire way down. It traded like $10 from 390. And then they didn't have great earnings, but they hit on earnings, and I think it just triggered the squeeze in this hot environment we're in. So price target not actually 0. There's a good chance this company can stay in business, but I think this definitely pulls back. I mean, right now they're getting back to being valued over like $3 billion, which I don't quite think they are.
Diamond.
Yeah, I'm gonna have to agree with Mander. I just can't get behind the fundamental business. I did tell Min the other day, actually, though, that one of these days when I ultimately have $100 million and I retire on the beach and the Bahamas and whatnot, I am gonna buy one of those car vending machines, because I actually do think that they're very cool. I don't think that they're very effective for business, but I think that they're like it's almost like a sign of the excess of the bubble of 2021. I think that's why I hold it so dear to me, and that's why I want one personally for myself.
For the personal collection.
Exactly. Yeah.
Hondo.
Yeah, so technically, it is obviously a short squeeze as far as the business is concerned. They're definitely not making any money. And I'm glad that Noah mentioned he would need $100 million before investing in something like this, because it's obviously not going to be a winning investment. So he's just doing it for fun, it sounds like. But yeah, I don't know. I don't really know what's going on with this company. I actually haven't looked at the stock all year. And the tweet that you had sent, and I just checked, it's up like 190% in the past 3 months. It's just absolutely nuts. And that's also very indicative of the type of market that we're that we're starting to trade in, and really shows sentiment that some of these names have just been getting absolutely hammered off the bottom. And it's very fun to watch. And for those people that are trading it, it's also very fun to trade.
All right. And last question. So next week is a pretty big week, I'm sure, as you guys know. We have FOMC on Wednesday, CPI, PPI, retail sales, loaded economic data to come out next week. And as everyone knows, usually when that happens, market decides to make a move. Not sure in which direction. So which direction do you guys think that will propel us to? Are we going to continue this rally, or is it time for a pullback? Alejandro.
So I'm going to go with rally because I'm going to stick to the technicals here. A level I want people to watch going into next week. And yes, the contracts are going to change. So it's going to be a different level. Just look at the chart. The double top from May that was also level of resistance going back to February that we broke out this past Friday, which on the June, contracts, that's 43.40 to 42.40 to 42.43. Okay, so that's the level that we broke out of last Friday. As long as that holds, bulls are technically going to be in control. I could definitely see us coming down and testing that level next week, but that's what I'm going to be watching. Next week is the fintwit Super Bowl. There's going to be a ton of noise. There's going to be a ton of garbage. The only way to trade it successfully is to take it one move at a time, chart your levels coming into the day. Do not develop a bias. What we're doing right now, we're answering this question for the fun of it. Do we think we're going to rally? Do we think we're going to pull back? Everybody's going to give their opinion. If you go into next week telling yourself, we're going to rally or we're going to pull back, you are going to get smoked, because even if we do rally, even if we do pull back, there's going to be 50+ point moves in either direction. You're going to be shitting your pants. So just take it one step at a time. Trade smart, trade small. And that's how we'll be. That's how I'm going to be managing next week.
Beautiful. Mander.
Said it perfectly. I'm just going to take pullback because I think looking at the chart, we're due for one. And whenever these high volume inflows come in, obviously data dependent, I think they just give the volume needed for price action to do what it wants to do. And I think a pullback after this entire month vertical is definitely warranted. If we're going to see higher, I think you gotta pull back in base.
And Diamond, end it off for us.
I'm gonna take pullback as well. I think there's so much news. I think that I don't necessarily think that this is going to be like take December lows type of pullback, but I do think that we've gotten extended here, and I do think that would make sense, just like from where we are at the chart. So I'll say pullback. That's what I'm going to go with.
All righty. That's going to do it for Bet the Bell. Pass it back to Hondo here.
All right. To end today's show, we're going to do trade of the week. Mander's going to take it away in just a minute here after Ryan runs it.
It's time for America's Trade of the Week.
Now, here's a guy who knows how to trade stocks.
Thank you. Before I recap the trade, let's run the video because I gave it to you guys as we took the trade about 2 weeks ago. What this shows to me is you can see the bull zones at the top there continue to get lower and higher at the same time, which to me means positionally institutions are bullish on Tesla at a lower price and a higher price moving forward. Whether it goes down, whether it goes up, they're positionally set to be bullish and continue buying. And same thing with the bear zones. You can see it takes a lower and lower and lower price on Tesla for them to get bearish over the next coming weeks. And to me, that means full auto bid, right? Realistically, it looks like going into the June monthlies there next week, Tesla would have to be under 160 for them to be positionally bearish. And besides that, they're buying the dip all the way down to 160 and looking for higher. I mean, that bull zone 3 weeks out goes all the way to 400. They are very, very bullish positionally on Tesla moving forward. And so I looked at this in a company with a technical analysis. We had a daily bull flag breakout, kind of all the stars aligned here. And so I took a swing on the June. Pull up the translator chart. I'll show you exactly what I was looking at on that daily bull flag breakout here. Got long Tesla really at 198. 198. It is now trading at 250 in the pre-market. The other one for me, Ryan. Thank you. Trading at 250 now in the pre-market. So you can see we had this daily bull flag breakout. We got the breakout, come back, retest, break hook, and go off of resistance and vertical ever since. So I think it was the 31st of May or June 1st. We jumped in the June monthly 220 calls targeting year-to-date highs. Sentiment behind that was this is obviously a huge name in the NASDAQ. Every other NASDAQ name, including the NASDAQ itself, had at least taken year-to-date highs, if not August highs. The NASDAQ was over August highs, and Tesla was still lagging the entire move, trading down at 198 off of the 217 year-to-date highs in February. So plan was just to take these for year-to-date highs over 217.50, and then the squeeze got on the second this thing took year-to-date highs. So got in risk-free. We got half out at 100%, trimmed along the way, and now just have runners going that are set to open up somewhere around 1,000% this morning. Tesla trading at 250 here. Trade of the week, trade of the year for me.
Amazing trade, I was saying. You also traded, I don't know if you mentioned it, you traded the weeklies. So you hit this one in the short term. On that same week, you bought the weeklies, and those went absolutely nuts, like 500% plus. But you also had the intuition to grab the monthlies, understanding that that Tesla might get a short-term pop, but that this probably can really go if everything continues as you expected it to. So that's what I thought was most impressive. And yeah, just an amazing trade, and hopefully people were able to take advantage of that beautiful setup that you gave.
Amazing trade, amazing squeeze. I mean, the markets are so funny when you get moves going like this. So yeah, a lot of ways to skin the cat. We got the weeklies, now got the monthlies rolling, and we'll see where they open up today. Probably going to take the rest of them out, even with a week left on them.
Yeah, it's a smart idea. Great trading, man. All right, guys, that's going to do it for this morning's show. That's going to do it for this week of Beat the Bell. Hopefully you guys had a great trading week. We'll be live today trading in the Kane Capital Discord. You can go to kane-capital.com or scan the QR code right here on the screen. We've got a 7-day free trial going. We'd love to have you guys. That's going to do it. Have an awesome trading day, guys, and have an even better weekend. We will see you back here on Monday morning at 8:30 a.m. Eastern Time. Have a good one, everybody.